the session. Remember that the purpose of this session, there's 5 core elements to good trading. First of all, your trading psychology. Always need to ask yourself, should I even be trading at the moment? Secondly, you need to know the macro fundamental bias, understanding current sentiment, particularly for a day trade or a swing trade. That sometimes means recognizing there's no real clear bias. Fourthly, technical execution. We want to look at keeping entries simple and repeatable. And finally, risk management, position size, stops, and just knowing your downside before you enter. So what we focus on in these daily sessions is elements 2 and 3, which is knowing the macro fundamental bias and understanding the current sentiment. Don't forget the course that we have for anyone who's new. Make sure that you've gone through this course. This macro fundamental course will give you a good understanding of how we put together our trade ideas, and also this risk events trading strategy shows you how to trade opportunities as they break, particularly with breaking economic news events. Now, the first thing, the resources we use every day. First of all, we use the newsfeed and the Squawk. Essential gives you real-time information, context, early clues about sentiment, and we'll be looking at this potential trade idea for the dollar yen on this Japanese news which came in. We'll look at that in a minute for a potential opportunity on the dollar yen today. We also then want to look at the economic calendar. Particularly, we're looking at the high and low consensus. Then we want to look at the interest rate tracker so that we can see what interest rate expectations are and how they're adjusting, potentially give us trade ideas, as well as looking at the implied volatility tracker, which shows us levels of the option market where you get sort of decent turning points. Hey, Ryan, good to see you. Those are the core tools we reference regularly. When it comes to macro fundamental and sentiment, it really comes down to 3 very simple questions each day, which is what's the baseline? In other words, what's expected? What will be a surprise? And then will that change the bigger picture? Often the change in the bigger picture tells you whether it's a swing trade or an intraday trade. That's often what the difference is. You can get a surprise, and that surprise can just last for sometimes, 45 minutes, an hour and a half. It's only when it changes the bigger picture and you get those higher conviction trade ideas. So without further ado, let's go and have a look at the new sentiment. First thing, I always want to look at what's been the overnight Asia news and what's going on in terms of the market open. So they've got this very handy daily European opening news. So China's returned from holiday, so that should give copper a little bit of a boost. And it's shrugging off the weak Wall Street finish on AI disruption concerns. Remember, one just key thing to be aware of. Let me just show you here. If you look at the S&P 500, we're now coming into, right, March. If you look over the last look over the last 15 years, we'll take that representative, right? Do you see how March tends to be one of the weaker months of the year? Can you see that? One of the key reasons, there's a few reasons for that, but one of the key reasons is you get repositioning ahead of the second quarter. So often what you'll see, most sort of portfolios will have some kind of a mix between 60% equities and 40% bonds, right? Or they'll flip the other way and it'll be 40% bonds, 60% equities. So often when you look at, say you look at the US 10-year yields, there'll often be an adjustment in that portfolio mix for the second quarter. Because if the mix gets out of sync, right, there'll often be these flows that come in around the end of Q1. And there's also sort of a mid-tax year development in the US. And obviously you get Fed meeting around the middle of March as well. So all those factors together mean that March tends to be a bit of a flat month for stocks. So we're heading into a flat month for stock. And if you look at, from 24th of Feb through to early March, you can see there is this bias of downside. Now it is pushed around heavily by that outlier 2020. But if you just look at the average months, see that March tends to be quite a flat month for the S&P 500. And then once you've got through March and you go into the second quarter, you get, new allocations, markets tend to look up, and then you get this strong percentage coming up. So in other words, with all else being equal, March tends to be a flat month. And notice as well, around sort of mid-March, sort of Fed meeting to 24th of March, it's particularly weak, right, around that time. And you can see some outsized falls in that period. So just to be aware, as we've said many times, that equity markets are struggling with this AI disruption and AI stretch valuation outlook. And you can see that rallies are continually being sold, right? False break here, selling off, right? Pushing up, selling off, selling off, selling off. And we had a spike on Friday with the Supreme Court ruling against Trump's tariffs, and he immediately picks them back up on. So the market seems to be fairly settled at the moment and saying, okay, tariffs are back here to stay, and we're continuing to sell the rallies. You can see here the Dow breaking out of this consolidation, trying to move lower. S&P 500, NASDAQ down towards the bottom of the range. The only thing to be aware of, you've got this bullish engulfing bit here, bullish engulfing bar on the NASDAQ. So this is a support area. So price is currently just sat in support. Okay. But just be aware that there's a flat period coming up for stocks. So that could be quite influential. So looking at the headlines, just wanted to point that out to you. Okay. Crude's tentative amid ongoing political uncertainty. That's particularly to do with US President Trump and whether he's going to go ahead with strikes in Iran. Strikes in Iran is negative for oil. If there's no strikes in Iran, that's positive for oil. All right, sorry, folks, just going to turn that off. There we go. Yeah, copper's rallying on China's return. China is the biggest purchaser of copper market, so that's not a surprise. The dollar is being pushed and pulled around on the risk-off tone on Fed's Waller's comments yesterday. Now, just looking at Waller, Waller was saying out that the strong non-farm payroll data could be revised lower, and he pointed out that it was inconsistent with other labor market data. So just want to watch out the ADP print today. Now, it's not on our calendars, but it is coming out at 1:15, the ADP data. That can move markets, particularly if that's a big miss in the private data. That will set the mood for interest rate cuts coming from the Federal Reserve, okay? So that should be dollar weakness. But if it's a strong number, that offsets some of Waller's concerns, and that's dollar strength. So ADP at 1:15 can be a market mover. We also have quite a few Fed speakers today. Just be aware that I could see that moving markets today. You've got Goolsby coming up, got Bostich, Goolsby at 1, Bostich at 2, Collins at 2, Waller coming at 2:15. So just be aware of that. And then consumer confidence shouldn't move markets much. Expected to be a slight uptick. So there's not really any big drivers for the dollar today. So it just means that euro dollar short bias, right, from yesterday, and we looked at that level here, take 50% off and then leave that at break even with that euro dollar move. Okay. Then I would add to euro dollar shorts if we get underneath this level at the 1,567, try 3 entries. There's not any clear massive drivers, but if you look at technically, we got a false break of a Harami inside bar, which is negative, but we are in this uptrend. So it's mixed messaging. But if we broke through the lows of the day, you'd expect those to carry on lower. Okay, and then potentially you're moving down to 1 at 650 down here. Right, so just watch out for that. We're in a good entry area from yesterday, which is just up here. So leave that at break even. Now, dollar yen, very interesting here. We had these comments come after. Sorry, folks. Right, Japanese PM Takichi reportedly relayed to Bank of Japan Governor Ueda her reservations about further rate hikes. So putting pressure on the Bank of Japan's governor not to hike interest rates. Now, following the meeting, Governor Ueda said the PM didn't have any particular requests, but the piece suggests, while details are unknown, so she was stricter than at previous meetings. Very respectful culture in Japan. So there's a pressure being applied to UADA. Percent chance of a hike in June is what's priced in. So let's have a look if that's changed much since that headline. Not much of a change, slightly lower. You can see on that headline there, slight shift lower. And that's been helping the dollar yen higher. So the way to look for this is there a break, right, of this channel, right, higher? Then I would say that that is reasonable for dollar yen upside. Get a break of the channel on the 15, then look for further buying opportunities. Also, it's possible to have a long position here at this 1,550 with you have just make it a 7-point stop, try up to 3 times. Now that is from the standard deviation turning point from the options market, 155.50. That means that if you get a close above this on the 15-minute, that opens up a buy opportunity, and you could take it from there. Get a close above. Just take it from above that level with a 5-point stop, try up to 3 times. And the ultimate target would be here, 1,5. Let's just see what that is. 1,5,637. And just be aware of the potential first target, the 1,5,637, because that's a nice option level. So that would be a first target there. Would need to see a break at this level. Okay. If you don't get the break of the level, don't go with it. So if you look on the 5-minute, there is a break at that level, but the on-balance volume is still negative. So I wouldn't go with that. I would want to see a sustained break with the 15 minutes holding right above this level, and then going with a subsequent breakout of the 15591. That's my take on the dollar yen. So euro dollar, the 17667, the other position from yesterday at break even, and then the euro pound, I'm keeping those longs in place. Right, it is getting quite sticky up there. So I am at a break even scenario, still in this sort of range. I am ultimately expecting this range to break out in line with the yields. You can see yield spread just keeps pushing higher. I'm expecting the euro pound to push up, but obviously I'm running out of a wiggle room there in the euro pound. So we'll see. I've got my stop at break even, remember here. So I'll just move that to break even. Right, and I'm just looking for that to potentially break out on the we've got some Bank of England speakers coming up today, I think. Let's just check. So that could go one way or the other, but it's not something to buy into. But buying into dips, a retest of that channel will be fine as it currently stands. Buying back here, I want to read it here, would be legitimate entry zone here. Just here at the 0.8700 essentially. That's it, folks. I'm just seeing if there's anything else jumping out at me. I'll just check the FX. Obviously, geopolitical risk, US President Trump, the tariff drama is still ongoing, and Fed speak. I think that's the major things. All right, folks. And the other thing is that dollar yen trade opportunity. Just keep your eye on that dollar yen tradable opportunity, and you get a 15-minute close above that level. That's valid now at the 15592. All right, just take maybe just a touch higher. There we go, the 15593. Right, 5-point stop, try up to 3 times. If it sort of drops back into the channel, just move this like that, and it's like a flag pattern. That's what we're looking for, right? So as it stands, that's a tight flag breakout here. But that could be a false break, and then just move that if we go back into the channel and then go with that break. But either way, that 15594 is not a bad level. I hope that makes sense to everyone. I really hope you have a very good rest of your session. I'll see the rest of you guys for futures later. Otherwise, take care and look after yourselves. Yep. Cheers, Mark. Bye, mate. See you, TM. See you later, Ryan. Bye, guys.